our next topic will be on sharing shareholder value with all employees. What a topic. So I'm pleased to welcome Médéric Gaillard. Well, as you know, like climate change, sharing value is a topic that is always addressed by LPs, GPs investors when addressing sustainability. So we're all looking forward to hear about your examples on the topic. Thank you very much.
Hi everyone, thank you for attending this conference. I'm very happy to share with you a few thoughts on profit sharing, value creation sharing with all employees. I'm Médéric Gaillard. I'm one of the 3 founding partners of Albares Partners. I'm going to share with you very quickly, I promise, a few words on Albares just to let you know who we are. So we're a French GP. We're founded in 2019 in Lyon after a spin-off from a well-established mid-cap private equity house. We have raised our first fund, 114 million euro, with an initial target which was 100 million euros. And we have already invested in 7 companies in our portfolio right now. And we're a team of 6, including 3 partners. We focus on the small cap market. We invest in any sectors of activity, and especially in transmission, buyouts deal, and growth capital. And what distinguishes us, I think, is our global CSR approach, because we have set up an endowment fund, and we have also 2 main axes on the ESG parts, which are climate change and reducing the carbon footprint of our portfolio companies, and the topic that we are now going to discuss today, which is sharing value creation with all employees. So maybe a few words now to introduce you to what's possible to do in France. In 2019, the PACT law made it much more simple for private equity funds to share the capital gain at the end of the deal with all the employees. What for? Well, first, we try to, it might seem ambitious, but try to reconcile work and capital on the one hand. Of course, to align the interests of both the shareholders and the employees on the mid-term, long-term performance achievements, which is very important for us. And also on the HR side, to make sure to be able to retain talents, specifically in a period which is quite complicated in terms of recruitment. So now this PACT law focused and gave a framework in which to implement this system. So which company are eligible? Sorry, well, all of them actually, as long as you integrate also the subsidiaries, may they be in France or in abroad countries. Who can contribute? Well, all the shareholders actually, the financial shareholders, our co-investors, but also possibly the founder of the company, the management team. Everything can be possible. Anybody who wants to participate can. And who will benefit from this system? Well, actually, all the employees and the corporate officers. I will give you more details about the conditions, but anybody can be concerned. So the mechanism is quite simple. We sign a contract with between the investor or the investors, the company, and then with the company savings plan, which is in French, le plan épargne entreprise, le PEE. And then we can, with this contract, share our capital gain at the end of the deal. One of the main topics also is the individual allocation. Once we have materialized the capital gain, how do we split this capital gain between all the employees? Well, you can have various options. It can be the same amount for any employee. You can, for example, take into account the seniority of the employees and the time they have spent in the company during the time of the deal. It can be proportional to salaries, to wages. It can be an option, or you can mix also these different criteria to have a very well-suited way of sharing these profits. The main thing to take into account is that there is a maximum amount which is fixed by the French law, which is 30% of what we call the pass, which means roughly 12,000 euros, sorry, per person. you can give more money, but in this case, you won't benefit from all the tax system which is dedicated to this specific mechanism. There is also an idea of calendar, because when you set up this contract of profit sharing, you need to keep your shares at least for 3 years before sharing the capital gain with the employees. It means that you need to anticipate when you take a stake of a company. You need to anticipate, because you know that if you have an exit before 3 years, this mechanism won't work. Once you give the capital gain, the share of the capital gain to the company has 1 month to put it in the company saving plans, and then the company savings plan has 19 days maximum to give it back to the employees. What's important to notice is also that the employees in this company savings plan need to keep the money for 5 years, and then afterwards they can take it. There are 9 exceptions to this system. I'm not going to get into these, but if you buy a house, if you get married, etc., you can get the money earlier. And tax consideration also, which is an important issue in France, as you all know. For the companies who have less than 50 employees, there is no taxation for the company on the capital gain which is shared. Above 50 employees, there is what we call in France the forfait social, which applies, which means that this capital gain is taxed at 20%. And then for the employees, the system is quite interesting, because the money they get will be net from tax after the social contributions, which represents 9.7% of the capital gain. So compared to a classic salary wage, it's definitely much more interesting. The point of this session was also to walk you through a kind of business case and to show you what we did at Albarest. We took the commitment to implement this mechanism in all the companies in which we invest. So all our portfolio company will benefit from this mechanism. So I took the example of Area, which is the first deal we achieved in April 2020. It's a company based near Grenoble, in the region of Lyon, which is specialized in the implementation of IoT objects. And it was a primary management buyout. The founder decided to retire, and we backed the former sales guy and COO to become CEO and managing directors. When we arrived, so we took, it was a family-run business, and we took a majority share. So you can imagine that having a financial investor as majority shareholder can raise a few questions for the employees. And this was also one of the ways to address this midterm objectives, and to share also with the employees directly and to explain them why we were here, what was the growing path, and also to tell them that if we all collectively achieve our goals, they will benefit from this value creation sharing. So, with the choices we made among what was possible to do. Well, first, we decided to have a uniform amount for all the employees. We could have imagined, and it will be one of my questions to you guys afterwards, to have an allocation proportional to the salaries. We decided to have a uniform amount for everybody to make sure that the people who were less paid will have the same amount than the people who were well paid, in order to have everyone aligned on the same goal once again. Nevertheless, we took into account the seniority of these people into the company, because we believe that if one employee stayed 1 year, it's not exactly the same contribution to the project than someone who has stayed during all our investment path. We also decided to fix a condition, which is 1 year of a minimum seniority. The French law says it's at least 3 months. We decided with the management team to fix it to 1 year at minimum, considering that the contribution needs to have been proven at least on the midterm. And from the financial perspectives, what we decided is to allocate 10% of our capital gain exceeding a gross multiple of 2 times on a multiple on our initial investment. The figures are probably a bit small, but it was just to give you an insight on what does it cost, and also how much can it bring for an employee. For example, if we have a look on what is our expected performance on this deal, if we have a return of 3 times in terms of gross multiple, it will cost for the fund an equivalent of performance of 0.1 in terms of multiple. We invested 5.5 million euro in this company. So this means that for a range of employees, which is today now around 110, if we achieve this performance, they will each benefit from 5,000 euros, which represents roughly 2 months and a half of salary for each employee. So it's quite significant. And I just remind you that this amount is almost net of tax, which makes a big difference in France, as you can imagine. I also wanted to raise with you a few discussion topics because there are various options that can be taken in this situation. All the options can be considered, but it really depends on the wish of the investor, the wish of the managers. And one of the first one that we had to address is, do the top management, who already benefits from the management package, should be concerned, by this value creation topic. I don't know if you guys have an insight on this. Should they be only concerned by the package, because what we give them will be taken off actually of the global basis that we will share with the other employees. So what should we do? Anyone? Trying to? Okay. Now, well, our thought on this is that regarding the amount that we are giving back, we are not, as I told you, we're a small cap fund. We're not investing 50 million euros per deal. So we try to make it significant to the employees. So we decided to take out the 2 top managers of this mechanism with their agreement, of course, and to symbolically say, okay, we give back to the employees, and there is the management package for the top management. The other question that we raised was the following: if they don't benefit from this mechanism, at the contrary, should they contribute as shareholders? Should they contribute to this mechanism? Because if the company is going well, if they are making money on their investment and also on their management package, it's because all the employees have contributed to this performance. So should they, as top managers, contribute to this mechanism? Well, I think it really depends on this topic and this specific topic. It's not a general approach that we have. It's only on the case-by-case approach. So regarding the size of the company, regarding the amounts that are considered, we decided for this deal because they invested not a lot of money, so we decided to put them aside also from this mechanism. But it could have been different in other situations. And finally, a last one, and I will definitely be happy to hear you on this one because it can provide a lot of debate. Actually, how do we allocate the amount? Should we consider, as you understood, we had a uniform allocation on this specific deal, but should we consider that someone who earns more money in the company is contributing more to the value creation at the end than someone who's getting less? That can be. We had a big debate on this one because we can imagine that someone who has high responsibilities that cannot be in the management package will have maybe a stronger contribution for strategic decisions, for commercial achievements. So should he be favored for what he brings? That's another question we had to deal with. As I told you, we decided to have the uniform amount for everyone. But happy to hear about your thoughts on this, if any. Okay. Should you have any question, I will be very happy to answer them, either on the technical aspects, even if I'm not a lawyer, but also on the mechanism, on the return of experience we had. Happy to share if you have any question. Yeah. Well, thanks a lot. Thank you very much. and happy to discuss during the rest of the IPM with each and one of you. Thank you.
Thank you very much, Frédéric.